This is Robert Kraft, and I'm your host on SNN.Network. And joining me today are two gentlemen, Gary Ribe and Eric Furey from Accretive Wealth Partners. We're doing kind of a special Wall Street View today because we're actually just recorded a podcast interview a couple days ago that's going to be coming out very, very shortly within a week of you guys seeing this. So, but they just published a blog post that I thought was really important to address and talk about right now because it's been a hot button issue, throughout this entire pandemic COVID situation, and it really has to do with PPP. So the blog post was, why we declined to take PPP funds, and I want to dig right in. So, Gary, Eric, welcome. Thank you for joining me today. And like I said, let's dig right in. Gary, tell us the thesis here. What's going on in your blog post, and why did you decide to write it?
Yeah, so I guess I'll start with why we decided to write something. We started to learn about various peers in our industry that are taking these loans, and we had looked pretty closely at the loans when they came out. And the first thing that we did when the Kerrs Act came out, we looked through and said, is there anything that could help us or help our business or whatever? And we first didn't think that the PPP applied to firms like ours, and then we learned that it did. And we looked into sort of, should we take it or not? And we had some internal debate as to whether or not we were affected in such a way that it would require it, or not. I shouldn't say require it, but that this was meant for firms like ours. I actually don't know that we ever reached agreement on that point. There's three of us, and I actually don't recall that we reached agreement on that point. Eric, did we reach any agreement or consensus on that point?
No, I don't think we did.
Yeah, so we had a spirited debate even internally as to whether or not this was meant for firms like ours. I think in the end we concluded that probably not. They excluded hedge funds and PE firms and asset managers from being able to take money, and the RIA is the economics of that business are not too dissimilar. So there was a debate about that, but what really stopped us was what we had to attest to take a PPP loan. And so when you sign the PPP application, you are certifying to the government that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And it sort of stopped the debate right there because, well, is this necessary to support the ongoing operations of the applicant? And if it is, what does that mean? And if the answer to that question is yes, we believe that it triggered a disclosure obligation on our Form ADV. In item 18, you have to tell clients and prospective clients if there's anything that might impair the firm's ability to meet its obligations to clients. And so we didn't want to, first of all, if we had an obligation to disclose something, we're going to disclose it. Second of all, we didn't want to have to talk out of both sides of our mouth on the issue to clients and say, oh, we're disclosing this to you, but it's no big deal. Does that make sense?
No, absolutely. It does make sense, but so let's dig in a little bit further, so, okay, you guys decided not to take the PPP, so, I mean, in essence, why was the point in writing this to let your clients know, like, look, we could have taken it, it was well within our rights to do it, but it's important to us to let you know that we didn't, and here's why. I mean, Eric, can you speak to that? I mean, was that part of the thought process?
Yeah, so in talking to some clients, I had some clients ask me, did we take PPP? I don't know what the motivation was behind the question, but I always answered it honestly. I sent them through what kind of the debate was and how we came to our conclusion. But we also saw that the topic was getting more and more notice, especially within the industry. And there is some debate, should RIAs be taking PPP loans? And we thought no. And we felt pretty strongly that the RIAs that are taking PPP, it doesn't look good on our industry. And we hope to change that.
I guess I'll just sort of piggyback on that. We're not saying that they shouldn't take PPP loans or they can't take PPP loans. The point that we're raising is that you can't have it really both ways. Either these funds were necessary or they were not. And if they were necessary, that's saying something, we believe that's saying something about your financial condition. And I didn't say this in my blog post, but I'll say it here. If you don't have your own house in order to merit a downturn in the market, which is where your revenues are drawn, maybe clients should question taking financial advice from you. And if that isn't the case for you, then were these loans really necessary? And I know enough about the economics of the RIA business, and especially of the RIA business for the size of the firms that are getting the attention for taking this money, that I don't believe that these funds were necessary for them to keep their staff. And if you roll all the way back to say March 25th or March 27th, whatever the date was that Kerrs Act was passed, the world was a different place. It was it was pretty scary, and from where the market was at that time. And I can understand why the industry participants were nervous and scared. We'd be lying if we didn't say we didn't have, we weren't nervous about what was going on. But by the time they actually got the money and by the time they're disclosing it, the world looks like a different place. And I should say that you don't have to seek forgiveness on the loan if you don't need it. And so you can simply return the money. Like I can tell you today, as I sit here, Eric can run a report and tell us what we think our Q3 billing is going to be. And we have a forecast. And so, if it's not necessary and you can see that it's not necessary, you don't have to seek forgiveness on the loans. But there's not going to be, my expectations for any transparency around that are very low. Who seeks forgiveness versus who doesn't. Now, maybe the government will surprise me and we'll get better transparency into something like that. But I have very low expectations for that to occur. And so,
just to kind of shed some more light
for a second.
Yeah, shed some more light on how the industry kind of operates, the RIA industry. Typically, firms are going to be billing in advance for the forward-looking quarter. So when you think about the timeline of everything that happened, markets peaking somewhere in mid-February, the Kerrs Act being passed toward the end of March 31st, firms know what their billings are going to be for the second quarter. And so you could plan your business around that. And so when you are submitting the PPP application, and I think it took a couple of weeks for the application to become available, people already knew what their Q2 billings were going to be. I'm sure a lot of firms actually have the Q2 revenue in their account. Now, you don't know what clients are going to leave you during that time, if any. You don't know, whatever. But anyway, you're submitting the application, you're certifying that getting these funds is necessary to support the ongoing obligations of the business. And if that's not true, if that money today is still just sitting in your bank account, well, then I would argue that it was not necessary to support the ongoing obligations of the business. And now we sit here as we're ending Q2, we're about to start Q3. You can run those forecasted billings. The market has come back significantly. Hopefully these firms have participated in that. And you have a rough idea of what business looks like for the next quarter. And so you really, I think you would be challenged at this point to say you really did need those funds to support the ongoing obligations of the business. If you did, you just have to disclose it.
Yeah, part of the reason we wrote this article is I don't have a high expectation that the industry is going to police itself very well, and so I'm hoping that this gets policed in the court of public opinion, and because that's what really matters. It's the clients that matter in all this, and so. If you're going to take the money and say that it's necessary, fine. But if you're a client, that's an important consideration. And clients should be asking their advisors, did they take this money? Because some advisors might be tap dancing on the head of a pin to avoid disclosing it. And so there's some thought out there that if you're not using it to pay investment professionals, you don't have to disclose this. And that's like saying, oh, well, I'm going to pay my investment professionals with this money, but this money I'm not going to. Money is fungible. And so I don't think that argument holds a lot of water, but I have a fairly low opinion of, I think our industry in a lot of respects has a deservedly poor reputation. And so I'm not super I wonder if there are going to be more advisors out there that are taking that approach. But clients should definitely be asking the question. And so if the advisor is going to try to poo-poo the necessity of the loan, that tells you something. And it's sort of like it's sort of an ethical gray area. And so it's sort of like when you're evaluating an investment opportunity. You know, when I'm reading a 10K, I'm a super skeptical guy. I think forensic accounting is really important. There are places that I go in a 10K right away where I can assess whether or not the accounting is aggressive or conservative. And if I see companies being aggressive in certain places with their accounting, it leads me to question the other places and the integrity of the financials as a whole, and says something about the management team and the people making the decisions. And so, you know, it's similar to me. In my view, I take a similar view on that. If you're going to tell the government one thing, but you're going to tell me something different, I don't know. It's something that I, as a client, I might want to reassess my relationship with the advisor, and maybe clients should be reassessing their relationship with the advisor that is taking this, because it sort of tells you who is the tie going to go to when something can go either way. And if it's not necessary, as a taxpayer, I'm kind of upset about that too. And so just knowing what the margin profile for these industries looks like and all of this sort of stuff, it's a good question for clients to be asking.
So let me cut in here, because I also want to, you know, be fair to both sides, because look, when Kerrs Act was passed, like, you know, that was late March, right? You know, we were still in the midst of, I mean, to varying levels, of course, you know, of anxiety, you know, just uber stress. I mean, because it wasn't just the RIA industry that was applying for the loans. I mean, it was across the board, and it was across the board with companies that were significantly bigger than even some of your peers out there that have taken the loans. Sure, some of them have now given it back, especially after, you know, the court of public opinion had weighed in on their opinion, you know, but at the same time, like it's you have to think to yourself, well, at the end of the day, it is a loan, you know, and it could get given back in a timely manner, or just paid off, and they won't apply for forgiveness. So, you know, what's your perspective there?
I don't know how we'll ever really know. And I will say that, you know, I'm not saying that this isn't necessary for everybody in the financial services industry. So I was talking to a good friend of mine last night who works for an investment consulting firm. You know, they bill quarterly, but it's in arrears, and they send invoices. And so they have a collections problem with their client. It's the financial service, the RIA industry, though, debits accounts directly. We don't have a collections problem. And so I just think that it's pretty different. And as I sit here today and I look at accounts, you know, things aren't off all that much from where they started the year. And so there's still the opportunity for the industry participants to do the right thing. And I want that to be part of the discussion. But the main reason we wrote this is because we felt like the clients should be asking the questions in this. And I think it requires industry participants to try to call it out. I think it requires some media attention to sort of shine a light on it, so it's in the court of public opinion. But I didn't see anybody talking about this. You know, there's a lot of throwing shade at certain people. I don't want to throw shade at anybody in particular. What I want clients to be prepared to ask the right questions and to understand that if the firm that you're working with took this money, that should trigger a whole host of questions and actually probably a reassessment of the relationship.
So,
and
I don't mean to cut in, but like for instance, what questions should clients ask then?
Did you take the money? Because not all firms are disclosing that they did. And so if they did and they didn't disclose it, that would be a concern of mine. And if they did, what were the reasons for doing so? And so, and are they at this point going to be seeking forgiveness of the loan, or are they simply going to be repaying it? Because it's correct, it is a loan. There's nothing wrong with a loan if you're going to repay it. And there may not be anything wrong with I don't want to say that companies in general should not be seeking forgiveness for this loan, because there are certainly a lot of companies out there. We have clients we advised on PPP loans that are taking these loans and need them to keep their payroll and to try to keep their companies afloat. That's not what I'm talking about. But for our industry, I think that it's seeking forgiveness. It would be unnecessary to seek forgiveness of the loan. And if you do, it effectively works out to a handout for the owners of the firms. And so, I mean, if you think about the economic structure of the industry is such that I thought the revenues would have to, for the biggest firms, I thought revenues would have to fall by over a third before you started to get into the overhead. And we're nowhere close to that. We're probably, you weren't close to that on March 26th or 27th or whatever date it was. And so, and in that overhead number, by the way, is oftentimes a healthy salary for the owners that are working within the firm. So the operating margin is the owner distribution over above what they take as a salary. So in my mind, it's a direct handout to the owners of these firms from the taxpayer.
Got it. So Eric, any thoughts on that question as well?
Yeah, I would say, to Gary's point, that 1/3 drawdown level, if a firm is reaching that point, they've certainly, I don't know, there's no right way to say this. They've done worse than probably the benchmark for that firm. And so should they be entitled to get a loan for poor performance? I would argue no. That's poor performance on the part of the firm. And I would also say, the SEC has been very clear that this is a material disclosure item. So in the event that a firm did take it and they didn't disclose it in any form or fashion, that would raise some red flags in my mind as a client.
Got it. All right. So, so I guess, really the main conclusion here is that you guys are very confident in your decision for not taking the PPP. You wanted to make sure that the industry, and that really like you said, this is for clients. You're just saying, look, whatever any firm out there has to do, that's their business. They got to do it. Not here to call anybody out by name, but it is what it is. This is really more for clients to say, hey, just make sure you ask the question right now and understand why they're doing it, and kind of going from there, right? I mean, Eric, go back to you on that.
Yeah, and just go back to your own personal compass and what guides you in the decision making, and who do you want to work with. We work with a lot of professionals, attorneys, accountants, insurance professionals. There are some people that we work really, really well with. We want to continue working with them because our moral compass, our ethical compass guides us to those people, and we feel good working with them. We feel good with our clients working with them. There are other folks that you meet that you just don't get those warm and fuzzies for. And so for a client, this is just another piece of information and transparency into the mindset and behavior and actions of what you expect from your advisor going forward. Maybe you're fine with the decision, maybe you're not, but at least you're informed and you could make the right decision for you.
Got it. And Gary?
Yeah, I mean, I would agree with that. The whole point of this is to sort of empower the clients to be asking the right questions. I don't want to, cast judgment on anybody in the industry for anything that they're doing in particular. Although I will say that if your pre-tax profits go from 8 million to 4 million this year, I don't think that necessitates you taking $1 million loan from the government. Like I don't know how you justify the word necessary in that instance. So and there are firms that are doing this where we know enough about what's going on. We're very confident that that's the case. So we just sort of felt like once we started to see some of these stories kind of creep out as companies filed ADVs, we sort of got more and more concerned that our industry was actively, I should say, but a fair number of folks within the industry were doing something that, their clients, they should be held accountable to in the court of public opinion, and their clients should be asking very pointed questions of them.
Got it. All right. So wrapping the book on that, but I have one more question. I have a feeling this could lead to another 30-minute conversation. So
okay.
get ready here. So, there's a lot of public companies that have been taking PPP. You guys are not only manage accounts, you guys are also investors, on the side managing your own portfolios. You see a company that takes a public company that takes PPP. As an investor, what do you look at, so that, let's say it's either a portfolio company or one that you're looking at? What are the questions then that you start asking yourself about that company that either you have in your portfolio or you're looking at more seriously? Gary, go back to you on that one.
Sure. So Eric and I invest in a number of different smaller companies here and there. And they've been recipients, they've been publicly flogged, and they've returned the money, a lot of them. Some of them have not. And it goes back to, like, in my mind, is the money necessary to keep their employment where it should be? It shouldn't be a handout to anybody. I don't quite understand the delineation between a public company with less than 500 employees and a private company with less than 500 employees. I don't quite understand sort of that. I mean, it's the public disclosure of it, obviously, is required of a public company, and so you can identify who these people are more easily and flog them for it publicly. And that's the same thing with our industry. Like I said, for our industry, my problem with it was the attestation that was required, and the daisy chain of events that would trigger, and all of that sort of stuff. But for a publicly traded company that's trying to keep people, as long as what they're saying they're attesting to is true and they need it, I think that's within the spirit of what the Kerrs Act is for. I don't know, Eric, do you have a different opinion than me on that?
On the spirit of the Kerrs Act, I agree 100%. What would make me reevaluate or look out harder is, what's the cash flow from the company? Is it what I expect? Obviously they're taking the money because there's some sort of liquidity need or a liquidity crunch in the short term. Maybe looking at debt covenants and see if you're at any risk of tripping a covenant anywhere. And some of that may already be priced in too, especially with these smaller cap companies. As you went through the downturn, small caps were quick to reprice, and they've been slow to recover. So, those are just some other areas that I'd look at.
I'm actually a private investor in a small company, and I reached out to them, and they would certainly be eligible for PPP money. And they just flat out said, we know we're eligible, we don't need it, we're not going to take it. And I rattled around in my head, well, okay, if you've got an obligation to the shareholders of the company, should you be taking it, and should you be seeking out like low cost of capital stuff? And like I said, it's one of these ethical gray areas, and you're serving a variety of different masters, but you can't talk out of both sides of your mouth on this stuff. Either it's necessary or it's not. And if this guy's telling me it's not necessary, well, then you can't sign that attestation. So I wholly agree with and support that company's decision to not seek the funds.
What other types of things in our financial history can you guys remember that kind of filled, I mean, you kind of gave an example not too long ago, but like, what other moments in our history can you remember where it's led to this like global question of financial, or of just this ethical gray area? We were like, I get it if you take it, but like, now I gotta have to ask those extra questions, versus like, oh, you're not taking it, this is why. Okay. When else have you guys seen something like this, and what's been kind of the long-term view afterwards? I know I'm asking a very loaded question right now, so whoever wants to take that one first, first thing that comes to mind.
Yeah, it's a pretty broad one too. Eric, can you think of examples? I mean, I know that there were financial institutions, there was TARP 12 years ago, and whether or not they would seek TARP funds and what that meant.
I would say this ethical gray area exists all over. It's just whether or not the broad public is aware of this. There are plenty of conflicts of interest that go on, especially in the finance industry, that may or may not be disclosed, or there may be poor disclosure, or it may come in the form of a 400-page prospectus that no one's going to read. And so I hope that this has brought more awareness to the general public of these conflicts of interest existing, and it empowers them to ask questions in the future of where these conflicts may be and ask themselves, how does that sit with me? But I can't think of anything in the recent past that's gotten on this public stage as widely as it has.
Absolutely. Gary, you wanted to?
Yeah. I mean, I would just add, like, in the financial services industry, it's opaque, and there's lots and lots of opportunities for sort of these, who gets what and who does the tie go to, so I kind of do think that the accepting of a loan that's not needed like this tells you something about that.
I think that's a good way to end it, fellas. So with that, where can my audience, because, hey, look, we're giving people a lot. This is about a half-hour interview and then another hour podcast this weekend. They're gonna get sick of me soon. But with that, guys, where can my audience go and find more information about Accretive Wealth Partners, and maybe find you on social media or anything like that?
Sure, Eric. Let me know if I missed anything. There's our website, accretivewealthpartners.com. There you can see our blog. If you email us, we can put you on our mailing list to get our client letters and communications. We do quarterly webinars too. We also have a LinkedIn profile where we post stuff, and a company Facebook page. We're working on getting a Twitter handle set up, but we've got to get it archived and whatever else, and that's going to take a little time. If you have any other questions or anything, my email is Gary at Accretive Wealth Partners, and Eric's is Eric at Accretive Wealth Partners. So you can reach out to us that way. Eric, did I miss anything?
Nope, you got it.
All right, guys. Well, thank you again for joining me today to discuss this really important issue and to kind of go through some of the ins and outs of it. So thanks again. Have a great weekend. And I'm sure we'll be talking again soon.
Sounds good.
Thank you, Robert. Really appreciate it. Thank you.
Yes.